Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, September 10th. The stock market posted a decent gain Wednesday in a roller coaster session. Much of the volatility was fueled by a third quarter earnings pre-announcement from Lehman Brothers. The S&P 500 was up 1.6% with 1 hour left in the session, but settled with a gain of 0.6% following a late surge in broad-based selling interest. 8 of the 10 economic sectors posted a gain. Lehman Brothers reported a third quarter loss of $5.92 per share, or $3.9 billion, which missed the consensus estimate that called for a loss of $3.35 per share. In addition, Lehman is cutting its common stock annual dividend to 5 cents per share from 68 cents, plans to sell 55% of its asset management business, it will spin off its commercial real estate assets, and is in talks with BlackRock to sell roughly $4 billion of Lehman Brothers' UK residential mortgage portfolio. Shares of Lehman rose as much as 19%, but the advance dissipated with the stock settling at session lows with a 7% loss. Financials as a whole saw a great deal of volatility before ending the day with a 0.7% decline. The regional banks group fell 3.2% after Keefe Bruyette downgraded several regional banks, citing valuation. Washington Mutual dropped 28% on reports that at least 3 potential acquirers are no longer interested in the company due to an accounting rule change. In other corporate news, Texas Instruments tightened its third quarter outlook, which remains in line with expectations. Some analysts expected that Texas Instruments would reduce its forecast, so shares advanced on the relatively good news. The tech sector rose 0.7%. FedEx posted a solid advance of 3.7% after the company raised its fiscal first quarter earnings guidance to $1.23 per share from its previous guidance of between 80 cents and $1. The company reaffirmed its full-year outlook. The raised guidance is not as good as it seems, though, as the unexpected drop in fuel costs rather than increased demand prompted the move. The company said slowing economic growth trends in the U.S. are extending into other areas of the global economy. On a related note, the European Union cut its 2008 growth forecast for the European economy to 1.4% from 2% and forecasts that the UK, Germany, and Spain will enter a recession. The news gave a boost to the dollar, which rose 0.9% against a basket of currencies, with the euro plunging 1.2%. The strength in the dollar spurred a decline in commodities, which fell 0.7%, with gold falling 3.8% and oil retreating 0.2% to 102.96 per barrel. Oil's decline came in the face of reports that OPEC plans to stop producing above its previously agreed quota, which means output will be reduced about 500,000 barrels per day. In addition, the Department of Energy reported larger than expected declines in crude oil and gasoline inventories. Despite the drop in oil and commodity prices, the energy sector, up 3.6%, and the materials sector, up 1.9%, rallied, benefiting from a rebound bid following the sector's declines over the previous 8 sessions of 16% and 12% respectively. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.